All righty, guys. Well, I'm going to go ahead and kick us off here, get us started. But thank you for everyone who has taken the time to join us today. Most importantly, thank you to our presenters. We are the East Colorado Small Business Development Center. And so those of you who aren't aware of our locations, as you can see here, we do have regions throughout the state of Colorado. Our specific center is focused here in northeastern Colorado. So taking care of these counties here in northeastern Colorado. If you are from any of these additional counties here in Colorado, like I said, your local SBDC will have a region. So I encourage you to take a look at our state website and figure that out, whichever area will be able to serve you best. Moving forward, we do have 14 consultants in each of these 13 counties that we cover. Here is a list of our consultants here. So if you are from the East Colorado region, all of our consultants are currently doing virtual consulting. And so would be more than willing to meet with you one-on-one in a virtual setting and discuss your business and operations currently at this moment. I do want to give an introduction today to our presenters. So thank you to Jenn Negley. She is a consultant and agricultural specialist from the East Colorado SBDC. For those of you on the call today, many of you may know of the Harnessing Hemp program that the East Colorado SBDC has put together, and she has been a large reason for the success of that program and a main driver behind that. Additionally, we have Mike O'Donnell. Mike is the Executive Director of Colorado Lending Source, and Colorado Lending Source has just been a great partner and a supporter of the East Colorado SBDC, as well as our hemp and agriculture focused programs as well. I also want to thank and welcome Jim Marty. Jim is the CEO and founder of Bridgewest CPAs and advisors to the cannabis industry. He has over 400 cannabis clients nationwide and dozens of Colorado hemp farmers currently as clients as well. So he's joining us today to really uncover the tax implications of these programs, the PPP program that Jen will dive into, and the EIDL program that Mike is going to discuss. So those are our presenters for today. Thank you so much for joining us. And without further ado, I will share the screen and pass things along to Jen, who, as I mentioned, is going to deep dive into the PPP loan and the application process.
Fantastic. So we'll get this switched over really quickly for everyone so that they can see this information as we're having a chat. We're going to be talking about a lot of numbers here, so that can be, I know, a little bit beneficial to see as we go along. Okay, are we good to go, Andrew?
Yep, we're good to go.
Fantastic. So I'm going to start out talking about the Economic Injury Disaster Loan Program, or EIDL, as I'm going to refer to it going forward, and the EIDL Advance Grant. So let's talk a little bit about what these actually are. When we talk about EIDL Advance, we're talking about a grant program that's capped at $10,000. And this is awarded on a per employee basis, so $1,000 per employee. So if you have 4 employees, you would potentially be eligible for $4,000 on the EIDL Advance program. If you have 14, you would still be capped at that $10,000, so you'd be eligible for a potential $10,000 EIDL Advance grant. Now, this is a true grant program through the SBA and does not need to be paid back. The other thing that I would want to make mention of, and I'm sure it's going to be talked about a little more in detail later in the program, is that the EIDL Advance is going to play with the PPP forgiveness portion of that program. So it will have an effect on the potential forgiveness of the other SBA program. So that is the first portion of the EIDL program when I talk about the EIDL Advance. Now, when we talk about the EIDL loan or EIDL standard, this is a loan that businesses can qualify for up to 6 months of operating expenses that do not exceed $2 million. With this program, both for-profit and non-for-profit businesses are eligible, and it's going to be a 3.75% interest rate for small businesses and a 2.75% interest rate for nonprofit organizations. This loan has terms up to 30 years, and the payment is deferred for 12 months. So the question becomes, who qualifies for this? Now, most small businesses, including sole proprietors, partnerships, LLCs, corporations, joint ventures, associations, trusts, cooperatives, small agricultural cooperatives, and most private nonprofits are all eligible for the EIDL program. Applicants must, however, meet the SBA requirements for a small business, which is 500 employees or fewer. And the size of the applicant alone without affiliates must not exceed the size standard for the industry in which the applicant is primarily engaged. So the SBA has certain size standards, and that actually you will be able to determine when you go through the application process itself. Now, another factor you must keep in consideration is the business has to be directly affected by COVID-19 and have suffered as an economic result substantial economic injury. So if you are having a bad year due to other economic reasons or things that cannot be attributed to COVID-19, then this isn't necessarily going to be a program for you. Now, to provide a little bit of clarity maybe on the agricultural side of this, traditionally, the EIDL program has not been eligible to most agricultural producers. In fact, the only people that have been eligible from the beginning of this program and its launch were agricultural cooperatives, aquaculture enterprises, nurseries, or producer cooperatives that are small under the SBA size standards. And so if you've looked into this in the last several weeks, that may have been the information that you've been provided, in which case you were discouraged from applying. However, this changed under recent legislation, the Paycheck Protection Program and Healthcare Enhancement Act that was passed on April 24th, that actually opened up the EIDL program to other agricultural businesses. And this brings us to yesterday. And yesterday, the SBA announced that starting at 12 p.m. Eastern Standard Time, they are opening up the EIDL program application, both the EIDL loan and the EIDL advance grant, to U.S. agricultural businesses only. And because of that new legislation, this information came directly off the SBA website, where you can see exactly how they determine those size standards. Agricultural businesses included those businesses engaged in the production of food and fiber, ranching and raising livestock, aquaculture, and all other farming and agricultural related industries as defined by Section 18B of the Small Business Act are eligible. So the SBA is encouraging all eligible agricultural businesses with 500 or fewer employees who are wishing to apply to begin preparing their application for the EIDL program. So as I mentioned, at this point in time, the only businesses that are actually eligible to apply for the program are agricultural businesses. And these slides will be sent out, so I have included that link to apply for the EIDL Advance program and the EIDL loan. Now, under this program, what are acceptable uses of funds? So go back to the original intent of this program, which is intended for 6 months of working capital. So that working capital can include payroll, accounts payable, maybe increased costs to obtain materials unavailable from your original source due to an interruption in the supply chains, rent or mortgage payments, fixed debt obligations, or other bills that you just couldn't pay due to your impact from COVID. With that, there are a few buckets of expenses that are an unacceptable use of the funds, and that's really not going to be a loss of sales or profits. These funds are not supposed to be used for any expansion type of project, and they're not intended to use to pay down long-term debt. Now, if it's a fixed monthly expense, yes, you can make that payment, but you can't make an extra payment on that debt to pay it down. Now, going to the loan approval criteria. So keep in mind that the EIDL loan is a loan, and so there's going to be 3 criteria that the SBA is going to be considering. First is going to be credit history. So does the applicant have a credit history acceptable to the SBA? Now, the SBA, as far as I'm aware, has not provided standards as far as a set credit limit for this program. for it, but they will be taking that into consideration. The caveat on this being that they have waived this consideration for the EIDL Advance program. The second area that they're going to be looking at is going to be repayment. So the SBA is going to be considering if the business has the ability to repay the SBA loan. And finally, they're going to be looking at eligibility. Can this business prove that they have been impacted by COVID? A few other questions that are frequently asked is, number one, is collateral required? So any loan under $25,000, there is not a collateral requirement. Above $25,000, what's going to happen is the SBA is going to require that you pledge any collateral that is readily available. So that does not mean that you're going to be declined solely on the lack of collateral, but if there is collateral available, they are going to require it. The second question, can I just apply for the EIDL Advance grant? No, you cannot. When you apply for the EIDL loan, you are asked if you would like to also apply for the EIDL Advance, and you do have to apply for both at the same time. However, you can accept the EIDL Advance and decline the loan. And finally, you apply for the EIDL Advance, and the BPP? And that answer is yes, you can apply for all of those programs. Now, when it comes to the application process itself, what should you expect? First, you should expect to apply directly to the SBA through the SBA website. And once again, I've got that link on here, and we'll be sending those out in the slides. And you're going to need two types of information to apply. First is basic business information. So you're going to need trade name, your FEIN number or social security number, your contact information number, and also a bank account information for where you would like your EIDL Advance funds to be deposited. The second kind of bucket of information is going to be information from your income statement. And the questions are in regards for 12 months prior to the disaster date, which the SBA has set as of January 31st, 2020. So they're going to ask you for information on your gross revenues, your cost of goods sold, and your agricultural cost of operation. And finally in there, when you come to about the fourth portion of the application process itself, there's going to be a check mark box, and it says, I want to be considered for the advance for up to $10,000. If that's the case, then you need to make sure that that check box is checked. This application itself only takes about 15 to 30 minutes to go through, so it is very quick. What's going to happen there, though, is then your application is going to go into a queue, and the waiting time is going to have to wait for it to be sent to an SBA lender to review. So while you're waiting on your application to reach an SBA lender, you should collect your additional financial documents that lender is going to request once they review your application. And you can find these documents at coloradosbdc.org/COVID. And this information that you're going to have to pull together includes tax information authorization form for all applicants, principals, and affiliates, so every owner of the business. Complete copies of the most recent federal income statement return, a schedule of your liabilities, personal financial statement, income statements, balance sheets, cash flow, and then other financial information may be requested by your SBA lender for it. At this point in time, the SBA is shooting for processing the EIDL Advance in 3 days. But when I say 3 days, that's not 3 days from the point that you submit your application. That's 3 days from the time an SBA lender reviews your application. So the waiting really has been for most applicants at this point for that initial application to reach an SBA lender. And then they also have then 3 weeks to process the loan. Due to unprecedented demand in this, I'd say that those are very loose guidelines and timeframes, unfortunately, because the SBA is trying to ramp up, but they are certainly improving the processes and getting those applications processed as quickly as possible. So that is going to be a very quick overview of the SBA EIDL program. I'm going to hand this over to Mike so he can talk about the PPP program, and then we are happy to answer questions at the end, and if you'd like to type those in the chat box as well, we'll make sure that we get those covered.
Thank you so much, Jen. Let's see. Oops. There we go. Let's see if that works. And hopefully you can see the screen. Is that correct?
Yes.
Okay, thank you. Hello, everyone. My name is Mike O'Donnell with Colorado Lending Source. And just giving you a quick overview of who we are. We're actually a nonprofit organization, been in Colorado now for 30 years. We play a lot with the Small Business Administration loan program. So the SBA now has actually 11 different loan programs. We work with 10 of them. And really the Paycheck Protection Program is the 11th program. And it will be here for a little while, but it won't be here forever. And so I'm going to give you a quick overview of this program and how it changed, just as Jenn was talking about how some modifications came to the program just in the last week that really allow more people in the agricultural space to access the program. So we've been around for a while. We've worked with a lot of different projects across the state of Colorado and all the different programs we work with. Owner-occupied commercial real estate. We've done some agricultural products there, like some dairy facilities. We primarily work with owner-occupied commercial real estate businesses. When they're ready to own the building, they operate the business out of. We've helped them with that. We help a lot of community banks in the Colorado process SBA guaranteed loans, which is mostly what the SBA is known for. And we have our own Community Advantage loan program, which is a small version of the SBA guaranteed loan. So as our mission is to foster the economic growth of diverse small businesses within our communities, a lot of that has to do with education and information and trying to correct some misinterpretation and misinformation that's out there, and keeping up with what's going on with the Paycheck Protection Program and the EIDL program is important. The SBDC is your best resource to keep up to date with those. This little chart just gives you a quick comparison between the two programs. You know, the big difference being the EIDL, the economic injury loan, is really a loan that you get directly from the federal government through the SBA. Actually, it's through FEMA, but managed by the SBA. And then the Paycheck Protection Program is a program you can get from a lender like a bank or a nonprofit lender like ourselves. So we've done quite a few paycheck protection loans too. Now, the program, when it was created by Congress under the first version of the CARES Act, was really and continues to be intended to be available to all sorts of small businesses. People that have employees, people who are self-employed, people who work in the gig economy, you know, part-time people, perhaps people who drive, you know, Lyfts and Ubers. It was expanded to include 501c3 nonprofit entities, but not all nonprofits, just C3s, as well as C19s, which are veteran nonprofits and tribal businesses. And so the program exists from the middle of February to the end of June, subject to continued funding. Of course, the program didn't exist in February, but that became part of the guardrails as to you had to be in business in the middle of February to actually be able to apply for a paycheck protection loan. And unlike most loans, in fact, I'd say unlike any loan that you might apply for, this loan is incredibly simple, and it's really the only situation where you as the borrower really prove to the lender how much you can borrow, and it's really based on your payroll costs. From the SBA's perspective, you know, you've got a couple of periods you can look at, but if you do have employees, you're looking at the payroll costs during either that period from March of last year to February of this year or all of 2019, special exceptions for seasonal employers, and there are a few changes made to that recently because you had to be effectively, you know, in business on the 15th of February if you're a seasonal employer, but a lot of seasonal employers aren't. They primarily work through the summer months. So there were some changes to the rules that make it easier for other seasonal employers to get involved. The maximum loan is $10 million. The interest rate's 1%. The loan term is 2 years, but you've got no payments of principal and interest for the first 6 months. So there's been a few fairly large loans done under this program, but the SBA has gotten a lot of flack for some of these really, really large loans. So pretty much any loan over $2 million these days will be really subject to audit and review. But again, what you're borrowing is 2.5 times your average monthly payroll costs. And when you look at an employer, you know, payroll costs includes things like salaries, wages, commissions. You can't include payments you make to a 1099 person, an independent contractor. They're not employees. They can apply for this program themselves. So therefore, there's no point in applying for them because they're going to do that themselves. Any payments of cash tips, any leave that you pay an employee for, vacation, parental, family, medical, any payments you've made to employees for dismissal or separation, any payments you make to help the employees with insurance premiums, healthcare, retirement contributions, all the sorts of things that employers might do for employees. And you're also allowed to include state and local tax assessed on the compensation of employees, but not federal taxes, just purely state and local taxes. And if you're a partner or a partnership, and if you've got a K1, and this only applies, again, this is the SBA just clarified this just a few days ago. If you have a 1065, if you file as a partnership, any funds that you report individually as owners of that partnership or partners as part of that entity as a K1 can also be added back into any other payroll costs that the business might employ that you can then calculate for the purposes of getting the PPP loan. What's really changed fairly recently is to do with sole proprietors and independent contractors, and also applies for people who work in the agriculture industry that might file a Schedule F. And so if you're a sole proprietor or an independent contractor, you're going to file a Schedule C, but you need it to be in operation or in business in the middle of February. You need to have self-employed income, and you need to be principally based here in the United States. And you filed or will file a Schedule C for 2019. Even if you haven't filed your taxes for 2019, you have to have a Schedule C for 2019. So working with your accountant or CPA or bookkeeper, that will be important to have if you're applying for a Paycheck Protection loan. Same if you're a farmer. If you file a Schedule F, you'll need to have that prepared even if you haven't yet filed your tax return. So I mentioned that in passing. The way you calculate how much you can claim under the Paycheck Protection Program, if you're a sole proprietor and independent contractor, and if you don't have any other employees, it's just you. If you file a Schedule C, it's just your line 31, your net income line. And if it's bigger than $100,000, you need to drop it back to $100,000. You take this number, divide it by 12, that becomes your average monthly net income number, and you multiply it by 2.5. That tells you how much you can borrow under the Paycheck Protection Program. The program allows you, if you got an EIDL loan to help you with things like payroll, to add the outstanding balance of that loan to this amount, the 2.5 times your average number, and you need to subtract any funds that you've received under an EIDL advance. So the loans can be, the EIDL loans, because they're a higher interest rate, are worth refinancing under a Paycheck Protection loan if you've got one. But if you also received an advance, you have to actually reduce what you can apply for by that amount. So essentially it comes and visits you here. Now, if you're a farmer and you report your income, the net farm profit on the Form 1040 Schedule I and Schedule F, you use those forms in lieu of the Schedule C. And on Schedule F, it's line 34, which is net farm profit. That is used to determine the loan amount in place of the Schedule C, line 31. The calculation is otherwise the same. So essentially, you just take line 34 off your Schedule F. If it's more than 100,000, you drop it to 100,000, you divide by 12, multiply by 2.5, and subtract or add any balance on an EIDL loan if you've already got one of those that you wish to refinance, and subtract anything that you got in advance-wise. And again, if you're going to be not have any employees, you wouldn't have received that advance anyway, because that's subject to $1,000 per employee. But that gives you a perspective of what goes on there in terms of the Paycheck Protection Program. And if you do have employees, whether it's on your Schedule F or your Schedule C, you go through a few extra steps where you look at that line 31 or line 34, you add in any gross wages and tips paid to employees and any pre-tax contributions for health and other benefits. And then you add any health insurance, retirement contributions, add all of those together, divide this number by 12, multiply by 2.5. And again, add any outstanding balance on an EIDL loan if you want to refinance it, subtract the amount of any advance that you've received. And so essentially that's the process through the Paycheck Protection. And again, a reminder, you can't include in your calculation of payroll costs whether you're an employer or whether you're a sole proprietor, an independent contractor, or a farmer. Compensation of anyone who has an annual salary in excess of 100,000. You can't include any federal taxes, including FICA, and you can't include any calculation of compensation to an employee whose principal place of residence is outside the United States. So those things are expressly excluded from your calculation of payroll. And then proceeds that you get from a Paycheck Protection Loan are fairly narrowly defined. So you can't use the funds from this program to for general working capital or to take a trip to Vegas or something like that. You can only use the funds for payroll costs and things related to payroll costs like healthcare, salaries, commissions, tips. In addition, you're allowed to use the proceeds of the loan for interest on any debt that you as a business might have. You're allowed to use the proceeds for any rent that you have on a rental agreement in a place before the middle of February. You can use it for utilities and interest on other things like lines of credit or notes that you might have related to your business or your farm. So there are 4 broad categories that you can use Paycheck Protection proceeds for, I should say, payroll, interest on existing debt, rent, and utilities. When you apply for a Paycheck Protection Loan, again, it's the simplest loan you'll ever do. There's no personal guarantee, there's no collateral, there's no credit check. It's purely predicated on what you did last year, whether you had employees or if you didn't have employees as a sole proprietor, as a farmer or a rancher, you could just use what you basically reported as net income. So there's some declarations you'll need to make as part of the application that you've been impacted by the particular pandemic we're going through, which, you know, for most companies and businesses and individuals is pretty easy to do. Now, the loan forgiveness section, this is really the amazing thing about the Paycheck Protection Program. It says that you can have your Paycheck Protection Loan forgiven in whole or part in an amount equal to the sum of certain costs incurred and payments made during the 8 weeks period beginning on the date of the origination of the loan. So once you get your loan approved by a lender, they have 10 days to actually fund that loan. And then once that loan is funded, the clock starts ticking for the next 8 weeks. Now, forgiveness can be reduced a little bit depending on whether you bring employees back or not, if you are an employer. And there are other things that we can look at. But essentially, the basic way that you can have forgiveness is spending money on payroll. Again, you can't go over $100,000 on an annual basis for an individual that might be an employee. So you're capped at $15,385. Any payments you make on interest or obligations you have related to the business, any payments on rent, any payments on utilities, all of those are what you can spend the funds on. Remember, you're borrowing 2.5 times your average monthly payroll, and then you've got 8 weeks, which is just a little bit less than 2 weeks, to 2 months, I should say, to spend the funds and apply for forgiveness. So if you spend 2 months worth of payroll, you have funds left over to do other things, like, as I said, pay rent or utilities and stuff like that. And you maximize loan forgiveness by spending at least 75% of what you receive under the Paycheck Protection Program on payroll-related costs. The simple calculation, and we're still waiting for some guidance from the SBA, is exactly how to calculate the forgiveness, and I think that they will make it much more complicated than the Act says it needs to be. In fact, they already have started to make it complicated, but we don't have the final details as to how to do this. But typically, a quick rule of thumb as defined in the Act itself is if you had 12 full-time equivalent employees, let's just say in January, and then over the next 8 weeks, as you start to bring people back, on average, you get up to 10 people. Then you haven't brought everyone back, so you are eligible for 83% of forgiveness on whatever it is you've borrowed. The amount that isn't forgiven just carries over. And again, a 1% loan, no payments for the first 6 months, and then you continue to pay the loan through the full term of 24 months. You can always pay the loan off at any time should you wish to, and there are no costs or fees or penalties associated with that at all. If you can bring everyone back that you had prior to this crisis by the end of June, the Act says there'll be no reduction in forgiveness. So you have a couple of bites of the cherry here. You've got the 8 weeks after you receive the funds, as well as to the end of June, although those dates are sort of corresponding and getting closer and closer now. Now, for a self-employed individual, independent contractor, or an individual farmer or rancher, the loan forgiveness is actually fairly simple and straightforward. It's going to be that line 31 on your Schedule C or that line 34 on your Schedule F, it's going to be 8/52 of that is going to be automatically forgiven for you. So it's really taking, you'll be able to borrow, your average monthly number times 2.5, but you'll be able to get automatic forgiveness on 8/52, 8 weeks out of 52 weeks, and without doing anything other than just showing them your Schedule C again. You can also have interest on mortgage obligations if they're deductible on your Schedule C. You can also include rent payments or lease agreements in place before the middle of February. You can't use the business use of your home for that because it's a non-cash expense. But if you do have to rent a storage facility or a shed or something like that, you could use that. And then utility payments that are directly attributable to the business, which can include the use of a car for a sole proprietor or a self-employed individual or a farmer or rancher filing a Schedule F. So all of those gives you the opportunity to get a lot easier, actually, loan forgiveness if you are just one of you or one of a few of you than it is if you're a large employer. So you'll need a lot of documentation for forgiveness, and I'm going to just run through this really quickly because the SBA hasn't really defined exactly what you need yet. But typically stuff like 941 forms, canceled checks, receipts, transcripts, whatever you've got that can show, and the more you've got, the easier it will be to get the forgiveness forgiven pretty quickly. The SBA might add some other stuff. And then I'm just going to jump through these next section. I mean, Jen talked about the grants. You've got access to those, the loans, the CARES Act. The CARES Act actually did make some changes to the EIDL program to waive the requirement for personal guarantees on smaller loans. And the original EIDL required you to be in business for at least a year to be able to get access to that program. So there were some modifications made to the program. Whether or not they flowed all the way through to the program reopening again or not, I'm not sure. But there were some changes that should have been impacted on the program. And with that, I wanted to alert you to just watch out for all of the scammers that have come out of the woodworks since the Paycheck Protection Program has come out there. Unfortunately, the federal government has allowed online lenders to access this program. So we've seen lots of abuse already, and that's just sad and unfortunate that people are actually taking advantage of a program. It's truly intended to help businesses get people back to work if we needed to. So I will pass the baton back again here if I can find my screen, and we'll pass it over to Jim.
Well, great job, both of you. You really covered this thoroughly. I just really want to make maybe a couple of comments, reports from what we see going out there with our client base. Number one is, for these two programs, marijuana companies are not eligible. The SBA has made that very clear right from the beginning. However, hemp companies should be allowed to access these two programs, but I would report that we have mixed results. We do have some hemp extraction companies that have gotten the PPP loan. We also have some that have been denied. And it really is up to the SBA lender, your local bank that you're working with. They have so much on their plates that if it's going to cause them any extra headaches, they are going to deny that or just not bother with the application because they have so much already on their plates. They don't want to do anything. And I do apologize. It's perfect timing. My lawn guy seems to be here right now. So I'm sorry about the background noise. I'll make this quick. Now the PPP loan, as Mike and Jen did a great job covering, those are getting funded very quickly. So the first tranche of funding was issued and ran out very quickly. The second tranche has not run out, at least I haven't heard it's run out as of today. So if you haven't applied for a PPP loan, go ahead and do it if you think you're eligible. The EIDL loans, on the other hand, I was talking to my partner yesterday, and at this point, only about 4% of the EIDL loans have been issued. So very few of those are out yet. So again, that's another program you can take advantage of. As a general rule, and we'll see if Mike and Jen agree with me, if you don't have payroll, your company does not have payroll, but say it has inventory that's been gone to waste or can't be sold because of the pandemic, you're probably going to be better off applying for the EIDL loan versus the PPP loan. You get the $10,000 grant. You might get the value of your inventory replaced. So look carefully at these two side by side. Mike had one here, and this is one that, this is my parent company, Beckerman, Grastrom, and Mayer up in Minnesota put this together. I wanted to point out one thing here. The uses here right in the middle, as they've discussed, you have your payroll costs, rent, utilities, mortgage interest. But over here on the economic injury disaster loan, you've got some more flexibility. You not only your payroll, but you can pay down your debts. You can pay your accounts payable. And if you can document that you have other expenses that can't be paid because of the pandemic, you can pay those with your EIDL monies. So one last thing I want to loop in here, and I don't have a slide on it. There is the possibility, and we actually have marijuana companies taking advantage of the payroll tax deferral, which is the 6.2% employer match of Social Security. So you get that right away with every payroll you print, because you don't have to make a federal deposit on your payroll tax return for that match. So you can keep that money in your checking account right away. The caution, word of caution with the payroll tax deferral is it could reduce the amount of loan forgiveness later on, because you can't double dip. You can't use you can't take advantage of the payroll tax deferral and the PPP loan forgiveness. Those are offsetting. So again, Mike and Jen did a great job. I don't have that much to add. They were very thorough. So with that, I think we might want to move to the question and answer phase.
Okay, wonderful. Anybody with any questions, go ahead and either you can input those in the Q&A down below, or go ahead and raise your hand and we'll unmute you as well. Jen, sorry, it looks like you're trying to talk. You're muted. Sorry.
While we're waiting on that, I'm going to pick the brain of my fellow panelists right here. Do you have any words of wisdom for anybody who receives funds from this program as best practices for the people who are considering doing these?
Very good question. I can take a swing at that. We are recommending that if you get either one of these loans, that you open a separate checking account at the financial institution that funded your either your EIDL loan or your PPP loan, and that will help document that you spent these funds consistent with the guidelines that we went over here today.
And I would just add too, I mean, Colorado Lending Source, we're nonprofit lenders, so we're doing a lot of PPP loans, but we don't have deposit relationships. So again, somehow or other keeping that information separate. You've got 8 weeks to actually document all that you spend, and just collecting that information, you know, hopefully in a spreadsheet or some way where you can do that along with all the receipts and evidence that you've got. When you do come back in to apply for forgiveness on the Paycheck Protection Loan, again, you could get 100% of that loan forgiven, including the accrued interest at 1%. That's not a lot, but you have the potential if you spend all of the funds on payroll and those other 3 items and you bring most of your people back, then that's well worth exploring. But to do that, you will need documentation. So again, everything you can keep and collect together to make it easier for the lender to review, is on the back end of forgiveness, the Act actually says that the lender has up to 60 days to process your request for forgiveness. And then the SBA has 90 days to reimburse the lender for whatever it is they forgive you. So remember, this is a loan from a lender like a bank. And then if they forgive the loan, the SBA has to bless that for them to actually get reimbursed by the federal government to then modify your loan so that through the remainder of the 24-month period, if indeed anything's left, then you continue your payments on that basis.
Fantastic. That sounds just in line with what I've been recommending. Documentation, documentation, documentation. Very, very important for any program dealing with the SBA. Another question I guess I just asked the panel is, these obviously are great programs for somebody who's impacted by COVID. But if somebody is looking for other resources, do you have any recommendations?
Well, you guys at the SBDC are a great resource. I know the state of Colorado has their choosecolorado.com page, and I know that there's more than 180 opportunities listed there, whether that's small grants or specific grants to people like in the arts, or a lot of loan programs. I mean, even ourselves at Colorado Lending Source, we've been able to raise funding so that we have what we call an emergency rural small business loan program available to businesses all across the rural communities in Colorado, with a particular emphasis on the Eastern Plains. And these are just an emergency $10,000 loan, you know, a cross between an SBA disaster loan and a PPP loan, in the sense that it's a 2-year loan, no payments for the first 6 months, interest rate's 3%, fairly easy to get. And we've just actually working on our first hemp production facility where we hope to approve today. So these are programs that are available to whether they're small businesses in small towns or whether they're agricultural. We can look at all sorts of different programs there. But there are many programs like that the communities are creating, counties are creating, and the state is actually rolling out or trying to roll out a few programs as well. So there are gaps in the Paycheck Protection Program and the disaster loans that the federal government's not filling, especially if you, as a Schedule C or a Schedule F, you don't have much in the way of income. You can't really borrow much under Paycheck Protection, and it's challenging to get into the disaster loan. So other opportunities are well worth exploring, you know, should you wish to explore them. So,
and if I could chime in, it's beyond the scope of this presentation, but there are, we did talk about the Social Security deferral of payments until 2021 and 22. In addition, there's 4 other payroll-related credits and deferrals. There's a retention credit, there's emergency leave. There's 3 of those, one for Social Security, one for a tax credit for sick leave wages, and there's also a credit for Medicare for health insurance costs. However, caveat, and the reason we left them out today, those last 4 programs at the federal level generally apply to employers with 50 to 500 employees. So we'll come back on that another day, maybe do a large employer program.
Yeah. I think a good takeaway about that is you need to be in close contact with your accountant and make sure that you're working with somebody knowledgeable about these programs for it. So let's see.
Any other questions? I don't see anything right now from the Q&A, but what I will do is I will include, obviously, with your permission, we'll include Mike and Jim's contact information with those slides. And if any of you have any questions here after the fact, if anything comes up, feel free to reach out to Jim, Mike, or Jen with any questions via email.
Thank you very much.
Awesome, great. So I have a few more slides, just as some additional resources I wanted to share with the group before we take off. The Colorado SBDC network does have continual updates on our website. So visit coloradosbdc.org/COVID for continual SBDC COVID-19 updates. We also have a COVID resource guidebook available to small businesses. This is available both in English and Spanish. So check out that link again for this downloadable guidebook. And then we have some upcoming events as well. So we have an event with the library in Windsor, the Windsor Severance Library, Manage Your Business Remotely in Times of Uncertainty. This will be an online event, and Google will be the presenter for that tomorrow. So definitely encourage you to join us at 10 a.m. on the 6th if you have time. And then, of course, we have our East Colorado Small Business Weekly Resource Update. That's every Friday at 3 p.m. So tune in there, and that can be found at our events website on our webpage as well. For continual updates for the East Colorado Small Business Development Center, we encourage you to join our newsletter. You can do so by texting EastCo News to 22828 for updates and events coming up, and brought to you by East Colorado SBDC. So again, I just want to thank Jen, thank Jim, and thank you, Mike, for your time this afternoon. Really appreciate that information. And if, like I said, if there are any questions, we'll share their email addresses after this event. And I encourage you all to get in contact with them at this time. So everybody, thank you for joining us. Have a wonderful rest of your afternoon.
Bye now.
Bye.
Thank you.